Live from Washington, D.C., this is Balance of Power with Joe Mathieu and Kailey Leinz.
Fed Day edition as oil prices kick higher on new strikes in the Middle East and a Federal Reserve looking warily at rising prices. I'm Joe Mathieu alongside Kailey Leinz in Washington. Kailey, remarkable to see Saudi Arabia enter the fight for the first time, which is why we're seeing a sharp jump in crude oil prices today.
Yep, Saudi Arabia joining with the U.S. on strikes against an Iran-backed militant group in Iraq. This follows the surprise attack, as the U.S. described it, that Iran launched at U.S. forces in the Middle East. And that is why President Trump is now promising to respond, saying in an interview that he's going to beat the effing S out of Iran.
That is the quote from the interview with Fox News. He's made similar threats, of course, to Iran. We don't know exactly what form or shape that will take, but we'll be watching closely, just like the markets are. We're seeing 7% increases in crude oil here. Of course, gas prices will likely follow, and it's part of the reason why, of course, rising prices are bringing us to Kentucky coming up this hour as the Energy Secretary cuts the ribbon effectively on what will be a new data center project powered by nuclear.
Yep, $100 billion. It's a NextEra and Brookfield joint venture, and we'll talk with the Energy Secretary, Chris Wright, about that. And of course, as we're having this conversation around utility costs, around gas costs, it all points to inflationary forces at work, and that is what the Federal Reserve is grappling with as we speak. We are just an hour away from that rate decision, which actually is a live one. The market thinks that there is a greater likelihood the Fed's going to hold, but they haven't ruled out a hike entirely.
Yeah, more uncertainty than we've had in some time for a Fed meeting, which is why you'll want to be here for our special coverage that starts in just a half hour's time. So we've got a lot to talk about.
Indeed, we do. And let's check on how the markets are shaping up outside of oil ahead of the Fed's rate decision as we turn to Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much, Kailey and Joe. Yes, we are looking at a down day here, perhaps putting it mildly, with an almost 800-point drop right now on the Dow Jones Industrial Average. We're at 51,965 on the Dow, down 781 points, a decline right now of 1.5%. The S&P 500 index is down 56. For the S&P, a decline of 0.8%. NASDAQ down 0.9%. Traders gearing up for the Fed decision. Oil is jumping. The market also bracing for results from two of the biggest AI spenders. That'll be Meta Platforms and Microsoft after the close of trading. Right now, Microsoft higher by 0.5%. Meta lower by under 0.1% right now. And of course, Amazon and Apple rounding out four of the Mag 7 names tomorrow. Again, we've got the NASDAQ 100 index down 1.1%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, down now by 3.9%. And all of this with the VIX. The VIX currently just below 20. Your 2-year, 4.33%, with the 10-year, 4.64%, the 30-year, 5.12%. Gold is up $2.50 the ounce, little change, flat on the day at $4,031. But crude continues to be an ongoing major story right now. WTI $84.49 a barrel, up 6.6%. Barrel of Brent crude $90.47 now. Brent surging 7.6%. We'll have a whole lot more on the energy outlook for you coming up in just a moment when we speak to Energy Secretary Chris Wright. President Trump, meanwhile, says the U.S. will hit Iran hard after a recent attack targeted a military base in Jordan. The latest clashes have caused Brent crude oil to surge, taking oil majors higher. Shares of ExxonMobil, they are advancing today, along with ConocoPhillips and Chevron. Right now, we are looking at ExxonMobil shares. They are gaining today by just about 3% on shares of ExxonMobil. Some of the other stories that we're following for you: DoorDash building its own delivery drones. It has gained the necessary approvals to operate them commercially. It is the latest in its effort to delegate more orders to robots as a way of cutting delivery times. And Caterpillar shares are falling today. They are plunging, down by roughly 6% after Baird cut its recommendation on the industrial giant and slashed its price target. So again, recapping here, we are looking at a down day for the Dow, the S&P, and the NASDAQ Composite Index. The NASDAQ 100 Index lower now by 1%. S&P 500 Index down 7%. That crew quote bears repeating. 84.52 on WTI, up now by just about 6.6%. Recapping, Fed decision coming up at 2 o'clock. I'm Charlie Pellet, and that Joe Mathieu and Kailey Leinz is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you very much indeed. As Charlie was just running us through, this is a market that is braced not only for a rate decision from the Federal Reserve, but also is waiting and watching to see what happens in the Middle East as the U.S. is promising to retaliate against Iran, potentially more strikes on the way after Iranian missiles targeted U.S. forces in Jordan. That is why we are seeing, as Charlie mentioned, higher oil prices today, back above $90 a barrel on Brent crude, with a lot of volatility obviously having happened in the energy space, and a lot of those higher energy costs having shown that they were feeding through into inflation when they were on the rise. Yeah. They have led to lower inflationary prints most recently because gasoline prices dropped so steadily, but it's very uncertain as to what the trajectory will be, and that is why it's such a tough call for FOMC members as they make their rate decision today, knowing that this is supply side problems that higher rates can't necessarily solve for, and yet if they want to promise that they're going to beat back inflation, it may lend credibility if they go ahead and hike rates.
Well, they're going to be looking at the core as well, but surely questions are going to be centered around this very issue when reporters like Michael McKee have a chance to go back and forth with the chair. We're going to bring all this to you live, as we always do, beginning with the decision at 2 p.m., the news conference at 2:30. Our special coverage starts less than a half an hour from now, live from New York. Kailey, these stories all collide somehow when we talk about energy prices, and you introduce the idea of data center, which many believe is driving electric bills higher, and it started a conversation about a closed circuit around these facilities. And here's a new take on this. You probably heard about the NextEra story. It was out first thing this morning. NextEra teaming up with Brookfield to build a $100 billion data center campus. In this case, though, it's going to be run by a nuclear facility in Kentucky. They're basically relighting a nuclear plant powered by uranium that will be home to a data center campus.
Yeah, so this is a generating plant that is coming with it. It all feeds into this ratepayer protection notion we've heard so much from the president about. He was just at the EPA last week announcing an expansion of that ratepayer protection pledge. He essentially wants these data centers to be bringing their own power, to be insulating everyday consumers from the higher utility costs that could come with them.
This is down near Paducah. The Paducah Gaseous Diffusion Plant, and the Secretary of Energy is there right now because the administration is very much supporting this effort. We're glad to have Chris Wright with us. Mr. Secretary, welcome back to Bloomberg TV and radio. It's good to see you, and it looks like the weather's nice today in Kentucky. This plant made uranium for the U.S. during the Cold War, privately funded. So I'm curious, what is the extent of government involvement and exposure here other than simply transferring the site? Is that why you're in Kentucky?
Yeah, I'm here. Joe, you summarized it well. We're here just to celebrate the Department of Energy is leasing these federal lands to multiple private companies to build some new nuclear technologies, as you spoke about. Also to build 2 gigawatts of new natural gas power generation that'll serve both a 1.2 gigawatt data center that'll be built here. That's the majority of that $100 billion. But also to add 800 megawatts of additional power onto the grid here, which will benefit all of the surrounding states. This is sort of a cornerstone move of the Trump ratepayer protection pledge, driving prices down and industry and job creation up.
As I'm sure you're well aware, Mr. Secretary, there is a live conversation happening in and around financial markets right now as to whether there is overinvestment happening into artificial intelligence and the infrastructure that powers it. If we're building perhaps too many data centers. And I wonder, Mr. Secretary, if you can still hear me, if there's a concern here that if it is in fact an oversurplus of data centers, is the power that comes with them going to be pulled off the grid as well, or is this power that stays?
Say overinvestment. I'm sure overinvestment in artificial intelligence. And then
all right. It seems like the secretary is having a little bit of difficulty hearing us. We'll try to reestablish that connection, Joe. But this is obviously the conversation that you've been seeing happen in real time in a lot of these technology stocks in particular, the notion that perhaps all of this investment isn't necessarily going to pay off. And that certainly is going to be front and center as we consider the hyperscaler results that we're going to get after the bell today. The market is going to be watching their CapEx numbers, perhaps forecast CapEx projects much more closely than even the earnings themselves on some of these very concerns.
That all starts tonight. Of course, Microsoft is going to be the big one we're looking at with Meta. We've got also Amazon and Apple coming up all in the next 2 days. Interesting, NextEra was holding up pretty well. It just turned slightly negative. When I saw $100 billion in that headline this morning, I thought it would be an excuse to sell because that is the fear, right? We keep dumping money into this thing and all of a sudden it's like we were laying fiber in 1999 again. The fact of the matter is, though, Kailey, we wake up every day to a deal like these. It's just part of the news cycle right now, and these hyperscalers are committed. The question is, for how long, I guess?
Yeah, and will the market continue to tolerate that commitment or punish them for it further? Those are certainly the questions that the market is contending with, not even including the political considerations around this, which, of course, come back to the notion of power and utility costs, hence the ratepayer protection pledge we were just hearing the Energy Secretary discuss. And Chris Wright is back with us now. Mr. Secretary, I apologize for the technical difficulties here. My question to you was around this notion that we're over-investing in data centers, that too much is being poured into the infrastructure. And I wonder if it does turn out that we have a surplus of these, if you expect the power that is being generated by them as part of these large projects is going to stick, that won't ultimately leave the grid if we see some kind of data center collapse.
No, it definitely won't leave the grid. In fact, it's one of the great things data center development is doing is it's funding and underwriting the development of so much new power generation capacity. Look, I think the upside for artificial intelligence is tremendous, but if there did turn out to be overinvestment and surplus of artificial intelligence, we would love to have the extra power. That'll allow reshoring manufacturing in the U.S. and continual downward pressure on electricity prices.
Interesting, Mr. Secretary. The NIMBY issue is one I'm sure you're familiar with, and I wonder if what you're announcing today in Kentucky is an answer to it. This is sort of the ultimate form of a closed-circuit data center from what it sounds like. Would that include water as well? Will you have your own water supply for this campus?
Absolutely. But as you know, a modern data center uses precious little water. These closed-loop cooling systems, you build a giant data center and it uses as much water as a McDonald's. So we do have water supply here. We are building new power generation. But you're right, using federal lands that was already an industrial site during the early part of the Cold War and repurposing it for a data center, tremendous community support to have that development going on here. And we are doing this at multiple locations across the Department of Energy, taking old industrial sites, bringing development to communities that are hungry for these investments, for these tax dollars, and for these job opportunities.
Well, yeah, how much opportunity is there, Mr. Secretary, to tap federal lands further? Where should we be looking for the projects of the future?
There's a lot of them. We have 17 national labs and then additional federal sites. So we announced a big one in Portsmouth, Ohio. We have this one in Paducah. You'll hear about one in South Carolina. You're going to hear about one out in Washington State and Idaho. So we have a lot of federal lands, and there's a lot of interest to develop. And again, not just data centers and power production, but right here in Paducah in Kentucky, we're going to have a new company called General Matter is developing modern uranium enrichment, essentially a more modern way to do what the giant buildings down here were built to do, to fuel the commercial reactors that are coming in the nuclear renaissance. So a lot of new technology and industrial development across our country.
Well, we don't see those buildings behind you right now, Mr. Secretary. If you're watching Bloomberg TV right now or with us on YouTube, you see Chris right in front of a beautiful open field with some trees. What's the timeline? How long will it take for you to get this site up and running and actually producing electrons to create whatever this data center will be cranking on?
So the data center should be under construction in the next 6 months. There actually is construction already underway. You can't see it because it's off to my right and not in your camera. There's already 100 acres under intense development right now to build new uranium enrichment capabilities. And then the power generation and data center will come on in phases over the next 4 years. But simply a large commercial development already started here in Paducah, Kentucky. And this is, again, what the Trump administration is about. Let's build additional energy generation to put downward pressure on prices And with that additional power we're going to generate, let's bring American jobs, American industrial might, and lead artificial intelligence right here in the United States of America.
Well, of course, utility prices are one thing. Prices at the pump, Mr. Secretary, are another. And we have seen those climbing back above $4 a gallon as we're seeing oil prices today once again spiking as the president's threatening to hit Iran hard once again. How high realistically should we expect prices to go if there is no immediate reopening of the Strait of Hormuz in the near term, if the diplomatic process is indeed not going to be successful and we see a return to military action?
Well, if there's military action, it's relatively brief. We are using the United States military today to escort out oil and natural gas out of the Strait of Hormuz. That actually has gone remarkably well. Little reported in the news, and probably that's because we don't talk about it too much. But we are restoring supplies of global oil and refined products to the world out of that region, independent of
how
whatever
much supply,
Iran
sir? Do you have an updated
to.
number for us in terms of how much is actually getting through the Strait?
So a 7-day trailing average right now out of the Arabian Gulf region is 13 million barrels a day. About half of that flowing through the Strait and half of that through bypass pipelines. So we're about 2/3 of the delivery of oil out of the Arabian Gulf region as we were before the conflict started.
That's really great information, Mr. Secretary. And I wonder your thoughts on what is now the involvement of Houthi rebels from Yemen creating a potential second choke point, as we've discussed, in the Red Sea. This is something that Saudi Arabia had already tried to pipeline around with regard to the Strait of Hormuz. Is there a bypass to the bypass, as Javier Blas put that you're talking to Saudi Arabia about, where additional pipe could be installed to get around this second choke point?
There is a bypass to the bypass called the Suez Canal. So you can go across to the Red Sea, and instead of going south down to the Bab el-Mandeb, you can go through the Suez Canal. That is happening as we speak. There's both oil tanker capacity through the Suez, and there is a pipeline that follows the same route, both of which will be employed to divert more oil that way.
Well, of course, as we consider the supply of oil, we also have to factor in the reserves that the U.S. has and that the rest of the world has been tapping into over the last several months as this conflict has been ongoing. Mr. Secretary, we know the SPR is at the lowest level in 4 decades, more than that. And I wonder how much lower realistically it can be allowed to go, where the operational floor is and what the plan is if we reach it.
Oh, we are a long way from the operational floor. I've heard some people that don't understand, not you, but I've heard people who don't understand how the SPR works saying, oh, it can't go below X amount of barrels. That's just not true. They seem to misunderstand that it's just oil in these caverns and otherwise it's air. All of these caverns are full of a combination of water and oil, and they are always 100% full. We just use the water to displace the oil out of these caverns. But with the planned sales we have, which will run into this fall, we'll still have meaningful supply, over 200 million barrels of oil in our SPR at the end of those releases. And what's great about the releases we're doing through the Trump administration is we're not selling these barrels, we're trading them. At the end of the day, these releases will add more than 40 million barrels a day to the storage in the SPR after the conflict than we had before the conflict started. These are additive, not subtractive.
We're looking at $4.09 a gallon on average nationally today, Mr. Secretary. Is it even possible to forecast where we'll be by the end of summer, by Labor Day?
It's not possible to forecast, but look, all I can say is gasoline prices today are $1 a gallon cheaper than they were 4 years ago in the Biden administration. That was just about a war on fossil fuels and selling fear. Here we are ending Iran's nuclear ambitions, ending a 47-year
Well, it had to do with the war in
conflict,
Ukraine as well,
and we
right?
still have gasoline prices. That didn't interrupt the flow of oil. It was just the fear of the interruption of the flow of oil. The Biden administration feared that Russia would slow their exports of oil or refined diesel, and the Russians did not reduce their exports. Just fear and bad management. They drained the SPR and they sold those barrels and didn't replace them. So misunderstanding energy and selling fear has not been effective. The Trump administration's about being honest, about being fact-based, about solving our geopolitical problems and balancing our energy markets. I'm confident we will see gasoline prices continue their long-term trend downward later this year. And of course, we are working every day to lower prices for the American consumers.
Well, you mentioned there, Mr. Secretary, finally, the question of Russian diesel, which now is not being exported because so many refineries have been targeted by Ukrainian drone strikes. I understand that for most gas that consumers are seeing at the pump, it may be one thing and you may expect prices to go lower. But is the same to be said for diesel, which also powers a lot of our economy?
No, you're right. Ukraine's attacks on Russian refineries have reduced the supply of diesel globally. It's reflected in prices. The best offset we have to that is the American refining complex. We are refining today more diesel, more gasoline, more jet fuel than ever in American history. America has been the savior for world energy markets during this crisis and will continue to do so. But yes, of course, we want to see diesel prices come down, increasing the throughput from the American refineries, something the EPA and the Trump administration is working with our refiners to just, again, move towards more common sense regulations on how refineries operate. That's allowing increased output. But to truly get diesel prices down low again, that'll take another year or so of President Trump's leadership. But the trajectory will be downward with diesel prices, downward with gasoline prices.
All right, we'll leave it there. Mr. Secretary, thank you so much for joining us. The Energy Secretary, Chris Wright, joining us live from Kentucky at the site of, again, a $100 billion data center project being spearheaded by NextEra and Brookfield. And as we reflect on our conversation with the Secretary, we turn now to our political panelist, Jeanne, Zaino, a Bloomberg politics contributor, Democratic analyst, and democracy visiting fellow at Harvard Kennedy School's Ash Center, joins us alongside Katie Frost today, Republican strategist and political director at the American Principles Project. Katie, I'd like to come to you on where we began our conversation with the Secretary around the issue of data centers, on the costs associated with them, and pushback that we are seeing from the American electorate. When we were with you in Georgia for the primary, we heard a lot about data centers and how unhappy voters are with them when they come to their communities. Is what the Energy Department is supporting here that they're doing and making sure it generates its own power and using federal lands to do it the answer?
I think it could be an absolutely fantastic solution. Potentially, we need to see how these projects play out. But, Joe correctly said, it's the ultimate NIMBY issue, not in my backyard. We all need data centers. We need that energy. We all, whether we say, oh, I don't use AI, well, just because you aren't using ChatGPT to create an image, you're using AI one way or another. It's being integrated into everything we do. So we need to have data centers, but they need to make sure it doesn't have a disproportionate impact on the community around them. So I'm from Georgia. As you're talking about, when we were here, my home county of Coweta County recently rezoned 829 acres of rural farmland to accommodate a new data center project that's coming in. Eminent domain has been used to take the land around it to run the power lines, and that has created massive pushback within the community. But if this is being put on federal lands and all of the power was being self-contained, I think you'd have a dramatically different reaction. So I'm glad to see this innovation coming out of the Department of Energy and think it really could be a fantastic solution going forward.
What's your take on this, Jeanne? If this is an issue that Democrats plan to seize on, we've already got a data center moratorium in your state of New York. What's your reaction to this approach? A campus that's self-contained, off the grid, closed circuit. Is that what developers can walk into a town hall meeting and sell?
I think it's going to depend on how this is rolled out. You have real questions, Joe, about are they bypassing the public in doing this? Are they taking into concern the public's reaction to this and how it impacts them. Because while these are federal lands, they are surrounded by communities of Americans who remain concerned about these projects. There's also the issue of transparency. You've got people saying that developers have signed non-disclosure agreements with local officials, keeping residents in the dark. You've also got resource constraints. And you mentioned New York, but let's just look at Florida. You have somebody like Ron DeSantis saying American citizens, or in his case, Floridians, shouldn't be paying one more dime to subsidize tech billionaires. And so all of those things remain, whether you're on federal land or whether you are on, you use public land or private land. So these concerns remain, and it's going to depend an awful lot on how they're rolled out and how the community is educated on the impact. But I have to agree with DeSantis. Americans should not be paying to fund tech billionaires. These things are draining resources and costing Americans. And that's why I agree with Hochul on the moratorium. So you figure out the best way to roll this out that's to the benefit of everybody and not to the benefit of the very, very wealthy tech billionaires.
And finally, Jeanne, well, we did talk to him about that and utility costs. There is the question of gas prices as well. And he said he can't forecast what they will be come Labor Day or perhaps where they will be come November. Is that not the biggest problem for Republicans right now, is that they aren't able to say definitively that Americans are going to see lower prices at the pump by the time they go to vote?
Yeah, I mean, it's an enormous problem for them. The prices are really, really impacting them at the polls. The war is wildly unpopular. And of course, a lot of that is tied to the price of gas and oil. And, as we listen to the administration, not only can't they predict what the prices will be, they can't predict how we see this war come to an end. And that remains an enormous albatross hanging over their head as they march into the midterm.
All right, Jeanne, thank you so much, as always. Jeanne Zaino helping us walk up to our Federal Reserve special coverage, democracy visiting fellow at Harvard Kennedy School's Ash Center. Thanks as well to Katie Frost, a Republican strategist from the American Principles Project. I'm Joe Mathieu alongside Kailey Leinz in Washington. The countdown now set, 5 minutes away from special coverage, a half hour away from breaking news from the Federal Reserve. And we're joined in our Washington bureau by Anna Wong, Bloomberg Economics chief U.S. economist. It's good to see you, Anna. About a 30% chance, we're told, of a hike. Do you roll your eyes at this, or is this a real possibility?
I think it's a possibility for sure. We have seen that Kevin Warsh has reduced forward guidance, and that's the reason why there's such a big fat chunk of distribution thinking that he might move. Our baseline view is he won't move because we did have very soft inflation data, payrolls disappointed. His task force will only be reporting results at the end of this year. Okay. And I think so, and there will be a major downward revisions to inflation in September. So I think he would be pushing to buy 2 more months of time for a rate hike.
So if a hold it is to be, how hawkish can a hold be?
Well, I think the fact that there is a July press conference is a signal of how hawkish it is. So suppose that there's no rate hike as we expected. Based on what Kevin Warsh has said, there shouldn't be a July press conference at all, because he used to say that if there's nothing important to say, then you shouldn't have it. So the fact that he is hosting one suggests that he will convey the degree of family feud. The meeting today, he said there will be a good fight. If he convey in that meeting that, in fact, a sizable majority wants to hike, then it basically is a signal that September would be live. And if inflation and payrolls data did not turn out favorable for a hold, then there will be a hike in September.
How do we factor in politics into that dynamic, though? You're creeping up on a midterm election and a president who doesn't want to see rate hikes at any time of year. The chair must be aware of this, and that's what's got this narrative started in some corners, that this might be his last chance.
Yeah, so one of the often recited arguments for hiking today is that he wouldn't be hiking closer to the election. Yeah. But the economics don't work that way. So based on our examination of the time it takes for a hike to transmit to the economy, it's actually 3 or 4 months. So if you start hiking today, it actually hits right before the election. So it just means that the only, if election is a consideration, the only time to hike is after the election.
Well, that doesn't leave very much time if there's officials who want to see a hike in the calendar year 2026. Can I also ask, Anna, if the president primarily wants to see mortgage rates go down, if the Fed were to hike today, could it not actually have the effect of suppressing the long end, because it shows that they're serious about the inflation fight and actually potentially lowering the rates, at least that the president cares about?
Yeah, I think there are many things to think about and how to push the long end down. Part of it is credibility. But when you look at inflation expectations, including the 10-year inflation compensation, it's actually been going down since Kevin Warsh has become the Fed chair. So really what's driving the long end up is a bunch of stuff, including tariffs, because the fact that tariff revenues are down and the refunds, 80 billion of tariff refund has happened so far this year, is actually causing people to be more worried about the fiscal situation that is independent of inflation credibility, because I think right now Kevin Warsh already has a lot of that.
So since we are having a news conference today, what would you ask the chair if you had the chance?
I would ask the chair that what does he think about the speed of transmission of policy, like whether the Fed staff is telling him that in fact there's monetary policy is long and variable, and then or whether it's short and fast.
Well, especially when we consider that the transmission can only transmit so much into areas of supply-oriented areas of the economy, like in energy. If we are to see a reigniting of what's happening in the Middle East and it drives gas prices and oil prices higher, how does a Fed hike materially change that, Anna?
Not much. In the Fed internal models, this is why I would ask Warsh this question, because internal Fed models would say if they hike into a typical gas shock, oil and gas shock, then the impact on bringing down inflation is nil, like 0.1 percentage point for a 75 basis point hike, whereas it will do a sizable damage to unemployment rate and growth.
Really interesting. Peter Navarro was making that point on our air on Friday, and it was interesting to hear him speak to this concern about a hike at this meeting. So we're about to find out here, Anna. It's great to have you on Fed Day. Anna Wong, Bloomberg Economics, our chief U.S. economist. We'll hand things over to our special coverage in New York in just a moment. Of course, Kailey will get the news at 2, the news conference 2:30. We're going to have a lot to hash out with McKee at 5.
Yeah, we certainly will, knowing President Trump is going to be speaking at 3 p.m. It's about upgrades to Dulles International Airport here in the D.C. area, but he very well could be asked a question about the Fed's rate decision, especially if it's one that he might not want to see in the form of a hike. Jury's still out. We'll find out in 29 minutes.
He may not need to be asked based on what we've seen in the past, but we'll find out together. We'll unpack it all on the late edition of Balance of Power at 5. A special edition of Bloomberg Surveillance, The Fed Decides, starts after this, only on Bloomberg.